Now, Standard Chartered Bank Kenya has reported a 70% growth in profits before tax for the first time in 5 years as the economy slightly rebounded from the COVID-19 impact. Full-year results shows the lender net profit rose to 12.6 billion shillings compared to 7.4 billion shillings over a similar period in 2020. The lender attributed the growth to innovations, partnerships and digitisation, while maintaining a tight control on expenses with underlying efficiencies, funding and continual investment.
The lender's interest-related expenses fell by 2% in the period to 3.5 billion shillings, driven by lower partially mitigated lower cost of funds on the interest-bearing liabilities. While operating expenses dropped by 10%, income rose marginally to 22 billion. Total non-interest funded income grew by 25% to 9.4 billion shillings from 7.7 billion shillings on account of strong performances in the wealth management and financial markets. This compensated the drop in total interest income of 22.3 billion shillings from 23.7 billion shillings.
And we've seen the need, and this is something we talked about more than 2 years ago, that Kenyans are looking for alternative investment options. Before, the only investment option that we could provide was either savings or fixed deposit. But our AUMs now, that is the funds we are managing under wealth management, crossed 131 billion shillings last year.
Despite the Nairobi Securities Exchange listed lender reporting a drop in loan loss provision, its non-performing loan rose to 13.7 billion shillings from 13.2 billion shillings due to COVID-19 economic hurdles.
When you look at the funded side of the balance sheet, our volumes grew, of course, still coming out of the challenges of the pandemic. The margins held fairly well last year. I think margins have been coming down across the sector for some time now.
Standard Chartered CEO Kariuki Ngari said digital products buoyed the lender as over 90% and 70% of commercial and individual clients respectively were transacting online.
Today, 96% of all our transactions, 96% across the bank are all being done digitally. All of them, which tells us how far we've come. And now with being able to have reached this level, I think selectively, mass retail is an area that we can be able to get into.
A final dividend per ordinary share of 14 shillings has been proposed, which together the interim dividend paid in December 2021 brings the total ordinary dividend per share for the year to 19 shillings and 81% year on year. A final dividend per ordinary share of 14 shillings has been proposed, which together with the interim dividend paid in December 2021 brings the total ordinary dividend per share for the year to 19 shillings and 81% year-on-year growth. The lender says going forward it remains cognizant of near-term risks in 2022, such as inflationary pressure due to rising oil prices, the Russian invasion of Ukraine and the consequent economic fallout, and 2022 being an election year, a period typically associated with increased political uncertainty, with anticipated temporary slowdown in credit demand and investment.